Elon Musk is faced with unpleasant decisions due to a looming Twitter interest payment. Please make use of the sharing options available through the share button located at the top or side of articles. Copying articles to distribute to others is against featuring com's terms of service and copyright policy. To purchase more rights, send an email to licensing@ft.com. Using the gift article service, subscribers may share up to 10 or 20 articles each month. Elon Musk's acquisition of Twitter is about to become due, and given the large amount of debt the company is saddled with, the billionaire may have to file for bankruptcy or make yet another expensive sell of Tesla stock. The first installment of interest payments tied to the $13 billion in debt the entrepreneur used to finance the takeover, according to 3 people familiar with the matter, may become due as early as the end of January. The corporation must pay nearly $1.5 billion in interest each year as a result of this debt. The CEO of Tesla and SpaceX obtained the enormous debt from a bank syndicate led by Morgan Stanley, Bank of America, Barclays, and Mitsubishi in order to finance his $44 billion agreement to take Twitter private in October. Without Musk's personal guarantee, Twitter is the corporate holder of the $13 billion debt. Since the takeover, Musk has hurried to reduce expenses by sacking half the workforce and looking for new sources of income by introducing his Twitter Blue membership service. The company's precarious financial situation, it lost $221 million in 2021 before the acquisition, and Musk has claimed that revenues have fallen since, has prompted the new owner to frequently highlight the possibility that the business may go bankrupt. A key test of Musk's leadership of Twitter, which has so far been characterized by disorganized management that has turned off its corporate sponsors, will be how he handles the impending interest payment. Musk remarked last month that this firm is like being in a plane that is flying at a fast rate of speed toward the ground with its engines on fire and its controls malfunctioning. If Twitter defaults on its first interest payment, it would join a select group of infamous businesses known as NCAA by debt traders, which stands for no coupon at all, and includes German payments provider Wirecard and U.S. car rental giant Hertz. Please make use of the sharing options available through the share button located at the top or side of articles. Copying articles to distribute to others is against featuring com's terms of service and copyright policy. To purchase more rights, send an email to licensing@ft.com. Using the gift article service, subscribers may share up to 10 or 20 articles each month. The management of Twitter would likely file for bankruptcy as a result of such a financial default, and the U.S. courts would then start an expensive and cumbersome debt restructuring procedure. Musk might avert this outcome by paying the interest out of Twitter's diminishing cash reserves or by painfully selling more company stock to raise the money for the payments. According to Musk, the company has around $1 billion in cash on hand. Without additional cost-cutting measures, he has also cautioned that its net cash outflow might reach $6 billion the following year. The debt will cost more and more when interest rates rise, and Twitter's enterprise value has already been diminished. Bankers and industry professionals who were following the transaction said Musk was unlikely to declare bankruptcy because doing so would put his company's control at danger. Instead, as he bides his time to turn around the company, his alternatives include working out a new arrangement with the lenders, such as a debt for equity exchange at a discount to the loan's face value, or finding another way to pay the interest on the debt. One restructuring banker predicted that Musk would most likely ask Twitter's creditors for a forbearance and try and work something out. Musk's roughly $26 billion personal ownership position in Twitter, along with those of other equity investors like Sequoia Capital, Oracle co-founder Larry Ellison, and Saudi Prince Al-Walid bin Talal, would be virtually eliminated in the event of bankruptcy. Their investments would follow the banks with loans secured by Twitter's assets, as well as the company's unsecured lenders and trade creditors, in line for repayment. A banker whose bank owns a sizable portion of the debt stated, "I presume Twitter is not going to default on the debt as it is quite cut and white what that leads to." He claimed that talks on debt repayments were still going on between Twitter's management and the banks, although this would require the banks to be willing to sell the debt to Musk at a discount and means he would have to write yet another check for Twitter if he wanted to remain in control. Bankers say Musk could try to improve his position by purchasing Twitter's debt cheaply, either during or outside of a bankruptcy, and later converting it to equity if he turned the site into a profitable company in the future. Please make use of the sharing options available through the share button located at the top or side of articles. Copying articles to distribute to others is against featuring com's terms of service and copyright policy. To purchase more rights, send an email to licensing@ft.com. Using the gift article service, subscribers may share up to 10 or 20 articles each month. The bank's ability to transfer the debt to investors has been hampered by negative opinion regarding Twitter's prospects since Musk gained control of the company and increased interest rates. Due to their significant balance sheet exposure, the banks may feel pressured to sell Musk the debt, either out of court or in the event of bankruptcy. One restructuring banker familiar with the Twitter agreement said of Musk, "Musk would be last in line for repayment, but obviously he holds a lot of power," citing the lender's wish to maintain good relations with Musk. He might be able to negotiate with creditors by threatening bankruptcy, but actually declaring bankruptcy wouldn't do anything for him. At Twitter, some financial reform is already being considered. According to two people familiar with the situation, bankers are in talks with Musk to replace around $3 billion in pricey unsecured debt with a rate of 11.75% with margin loans guaranteed by Musk's ownership stake in Tesla. Prior to last year's financial market sell-off, the banks were forced to hold tens of billions of dollars worth of debt from prior agreements. However, given its magnitude and the rate at which the firm has deteriorated, the Twitter deal stands apart. Such a debt exchange would limit Musk's ability to make money. According to corporate papers, almost 63% of his current Tesla shares have already been assigned as loan collateral. He might be required to put up more of his holdings if Tesla stock continued to decline, leaving less to support future borrowing, as the firm limits the amount of stock that its executives can commit to 25% of the value.